You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's volatility reimagined. Learn more about Spikes at miaxoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution and trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, LLC, please visit matrixexecutions.com. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is noon Central, 1 p.m. Eastern. It is time once again to view some volatility. Yes, it is time for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the network upon which so many of you have been binging throughout the week, this week and every week. Usually a couple of shows hitting you a day here on the network. So if you like what you hear, Vol Views, anything else we do here for you on the network, keep rating and reviewing. It really does help this legion of new people who are discovering the markets day in, day out, discover our content and have a safe place to turn in these troubled times. Go keep those questions coming too. We do love to hear from you folks. So go figure, you probably got a lot of questions about volatility right now. Well, we're here to help you out. Let's see who else we're hearing from on the old program today. First, let's go back out to the MIAX hot seat, where I am joined once again by Mr. Tom JARCK, the volatility product specialist over there at MIAX. Tom, welcome back to Volatility Views.
Hey, Mark, how are you? Thanks for having me on the show again. It's been a few weeks. Glad to be here and talk about vol.
I get it. You like to come on when things are popping off, when things are happening,
Exactly.
When there's some stuff to talk about. I get it. I get your strategy. I can't say I hold it against you. And also joining me, holding down the Matrix hot seat this week, I'm pleased to say he is not stuck in a snowdrift or, I believe, without any functioning modern utilities. He is the Texas brisket, a.k.a. the spicy chili, a.k.a. the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com, by way of Carmen Line Capital. Mr. Meatball / brisket / chili How are things down in the southern snow belt these days?
Hey, no beans in my chili anymore. Never again now that I'm in Texas. Though things are good. We've got hot water again, and everyone seems to have power. So things are back to normal deep in the heart of Texas.
Things are looking up. When you lose basic amenities of life, it becomes surprising how your priorities shift and what things become important to you that maybe weren't a few days ago. So interesting stuff abounds. You know what else is interesting? It's these crazy volatility markets. So let's get to a little bit of the old volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Welcome to the Vol Review, the portion of the show where we break down everything that's lighting up the crazy world of volatility. And, things are pretty crazy again this week and again today. Of course, we're coming hot off the heels of a crazy day yesterday where the S&P just got, I think the technical term is annihilated. It was off 2.4%. We had, the Dow taking off over not quite 2%, ending the day about 1.8%. NASDAQ closing off 3.5%. We had vol skyrocketing, VIX and spikes, both spiking, pun intended, north of 30. Now coming into today's show, we have a bit of a mixed bag out there on the street. The Dow continues to get beat up off north of 0.75%, about 0.82 or so on the percentage realm, whereas NASDAQ and S&P are fighting their way into the green. S&P ever so slightly up about 0.25%. And the NASDAQ kind of taking charge to the upside now, up about 1.25%. So trying to fight back the annihilation that it had yesterday. And as a result, we're seeing the vol products coming back off their highs here a little bit. Coming into showtime spikes, it just ticked below the 27 handle, about 26.75. That still puts it up about 4.25 points from our last show, but off the high of just a little bit north of 30 that it hit not that long ago. And VIX cash was at about a 26 coming into showtime, puts it up still about 4 points from our last show, but also off about 4.5 points or so from its high of around 30.62 out there. VVIX, of course, all this vol that's moving and shaking means VVIX is frothy. VVIX is juicy. It was at about a 127 coming into showtime, puts it up about 8.5 points from last show. So, vol is moving. Viking, maybe we'll get to, I think we have a question about that a little bit later. But let's go around the horn. Let's go the way we started here. Let's start in the MIAX hot seat. Mr. Tom, sir, you picked a fun one. You picked a good one. A lot to parse on the show today. What's been lighting up your tape from a vol perspective this week, sir?
Yeah, well, there's a lot going on, obviously, and there's a lot of different aspects. And if I were to go into everything, I'd be jumping all over the place. But obviously, the one main thing I've been, keeps catching my eye is is really rate vol. And there was a lot of talk about the moves in rate vol prior to even the moves we had yesterday in the market. And it was kind of interesting. You had rates moving so much higher so quick from the beginning of the year till they're up like 60 bips from the beginning of the year till I'm talking about the 10-year rate till about today it came off a bit, but in the last 2 weeks 40 bips of that move has happened. So rate vol has been pretty interesting. It's been I was kind of expecting a little bit more of something to when you get rates moving up higher equal with S&P dividend yield, usually you get a little bit of a pullback in equity markets. And so it was kind of holding out there for a bit, and so I wasn't totally shocked of some of the moves we had yesterday and the day before. And one of the things I want to point out too is that our friend Simon Ho in Sydney, he's in T3 Index. He has a vol indicator called yield vol. So I like to look at that one too. It's basically the it's the 1 month on the 10-year swaption rates. So that's another one you can get on his website. I have it on Bloomberg, but. So that's been the one thing I keep my eye on. Obviously, you took my little catchphrase there, the spike in spikes yesterday, up to almost like a 31 handle, and then obviously retracing quite the move today. The other thing that's I've been looking at a bit is the it's been nice to see some of the growth in some of the volatility ETPs. despite direction. I mean, there's trading interest going into those products. The shares outstanding has been growing, so that's been nice to see and to hear about. We did have little spikes trades this past week, but we'll talk about that later. We get about some of the trading activity. That's been some of the main things on my radar.
Our buddy there, Mr. Ho, he does seem like he wants to corner the market on all volatility indexes, Tom, across all products. He's got, of course, spikes. He is the spikes father, but also the aforementioned yield vol. He's been on our crypto show talking about his bit vol. He's got the milkshake for dairy vol. You name the marketplace. He's created a volatility index for. I'm looking at this yield vol right now, which measures the expected annualized movement in the 10-year yield. So an interesting thing here. Not at its apex recently, as you might imagine. It's at about a 54 right now. Got up to about a 58 and change yesterday, but actually it was much higher back in right before the election. November 3rd hit almost 76, 75, 96. And then back in the madness of March last year, it got up to about 160. So what we're seeing right now in the low 50s is less than a third of what we saw back in last March, and still well below the levels we saw even going into the election last year. So everyone was saying, the rates market is in a tizzy. Volatility out in that space is insane. At least according to this and some other metrics out there, perhaps not so much. Let's go out to the meatballs, sir. Obviously a lot going on this week from a vol perspective, sir. What was lighting up your tape down there?
Yeah, pretty interesting week. Most of the week we spent in a pretty big rotation trade. We saw a lot of strength in oil, a lot of strength in transportation, the airlines in particular, a lot of strength in the cruise liners. The cruise liners have been off to the races. And with that, we saw a lot of softness in the NASDAQ names. NASDAQ volatility is up dramatically this week, even when compared to like the VIX, because you look at names like Apple and Amazon and Google, and they were just getting face punched. Yesterday was actually the first day that all the indexes really took it in the chin. We'd see the NASDAQ get slapped around for most of the week already. And so I'm looking at volatility in VIX, and I'm asking myself, as our friends at Thomas would say, is this a spike or a swell? And I'm up in the air. It feels a little spiky, pun intended. I think that we're required to say pun intended after we say spike every time going forward.
Yes, you are legally obligated. It is in the contract for the show.
So, and the shock and the spikes, that spike, I'm just debating whether it was a swell or not, and whether there's some legs to this. The Merrill Move Index got to 73 yesterday. That's a pretty nice move for bonds. And the one thing that I think is really fascinating, and I, Mark, I called you out on Twitter on this one, is we've got a down 90-day, we've got the spikes in the VIX both over 30, and there were more VIX put contracts traded on Thursday than there were calls. Today, we continue to see that trend. Huge volume in the downside puts in VIX and spikes. The 23s, the 22s, the 21s are all being bought. There was a large call spread that went up. The two strikes that have a lot of open interest in VIX are the 30s and the 40s. And we did see a 30-40 trade go up, but they were both on the bid. So I'm trying to figure out whether that was a call stupid or just a interesting way of putting up a call spread, but just not a lot of upside appetite for volatility, which is really weird. They'll buy the 80s and the 110s. Nobody seems to want to own the 30s right now, which is a little strange. You would have thought they would have been going after that. And so I continue to be kind of confused by the order flow in options. It continues to be bearish and more bearish on these up days, which is not what you normally expect to see. I would expect to see call buying in spikes, call buying in VIX. Instead, puts trading. Everyone seems to be playing the spikes. The spike in spikes was a spike, and not a swell, which leads us to a 70 VIX and a 70 spikes. But time will tell. The bonds are a huge market, and if they start really moving, if we see that bond vol start to get a lot higher, VIX and spikes are going with it. So be prepared.
Yeah, interesting stuff afoot. You're right about the options trades. Speaking of outlandish strikes, there's some interesting strikes going up even today. We'll get to all that in a little bit. Did you want some, let's say, VIX north of 100 listeners out there? Well, we got some in store for you in a little bit. But first, let's get to the futures realm coming into the start of the show. Obviously, that cash is whipping around all over the place. Not quite a premium to that front month future anymore. It has given up some of that juice. Coming into showtime, the March future had about 1/3 of a point over the cash, which brings that spread in quite a bit. Obviously, about 3 1/3 points as that cash whips around. It's going to really tighten up that spread, obviously. Going out to April, we had almost 2 points premium over the cash, about 1.9 points. That brings it in almost 5 points, 4.8 points from last week. So that cash is just whipping around and throwing everything into a weird flummox. Of course, once you get out past May again, it's the same setup out there in the futures, which is kind of glued a little bit north of that 29 level or a little bit south of it, but right around that 29 level all the way out. You get to November, you dropped all the way to 28.5. That's about it. So it does still have this plateau shape through May and beyond, all the way out to pretty much the end of the year. The market's saying, you don't know what the hell's going to happen, but something is going to happen. So maybe get aggressively short in that period at your peril. But either way, that same shape we've been remarking on for a while, still hanging out there in the futures, even while the front portion just whipping around like crazy. Tom, anything lighten up your neck of the woods out there on the futures front this week, sir?
Spikes futures this week particular, no, but in general, we've been pretty happy with the bid offer spreads and seeing some trades go through. Obviously, we want to see more, but so everything's been going pretty good there. We've had a lot of calls with a lot of folks out there in the market participants, and it's all been very, very positive. These things just take a little time, and it's the old catchphrase, flow begets flow. So it's still, we're still in the works, and it's been going pretty smooth overall.
And Mr. Meatball, like I mentioned, we're still hanging out in that kind of weird plateau shape out there in the VIX futures. Anything lighten up your tape this week from a VIX futures term structure perspective, sir?
Yeah, it went from a pretty nice contango to a real flat term structure real fast. April, May, June are all trading on top of each other. I was pointing out you can get the Russell Rhodes trade. The May-June 35 put spread, you can sell for a nice credit, gets you short the May future below 35 and long the June future against it. So that spread, that whole month 2, month 3, month 4 is really the area where I'm waiting for it to collapse at some point. It has been amazingly durable and resilient. All of the decay, all of the crushing of these futures that traders rely on seems to only happen in the final 30 days. Nobody is really willing to short those back month futures, which is interesting because when I'm looking at my sheets, when I'm looking at my vols, when I'm looking at all my theos, that's the area that I most want to be short.
Yeah, if you buy kind of the thesis people have been putting forward for a while there, that maybe heading into the middle of this year, maybe we'll be turning the corner on all the other madness that has beset us for the better part of the past year and change, then you might argue that those should be demonstrably lower. And yet they have not been and refuse to be. And as you mentioned, don't seem to even want to come close to the realm of rationality until, right before expiration out there. So we are still in that interesting for everyone out there who's been making the headlines. And you saw it, of course, a lot back when VIX and spikes dipped ever so briefly below 20 a couple of weeks ago. That was set off the financial media into a tizzy. Here we go, the new regime. And no one was talking about how just a little bit down the curve, it's an entirely different story. So I got tuned into Vol Views, listeners. We're kind of the only ones out there talking about this stuff. All right, let's go on out to the land of spikes options. Remember, listeners, we were talking not too long ago about the size position out there in spikes land was a vertical with some puts. There was the Feb 32.5 40 vertical versus the 29 puts. That was pretty much the big position that was done about 1,000 times, so 3,000 contracts total. That expired, obviously, in February. Well, it sounds like that guy, he didn't get enough. He's back for more. He came in for pretty much a very similar trade this week. Tom, why don't you break it down for our listeners, sir? What was lighting up spikes this week? Yeah,
so it looked like, like you said, because of the size and similar strategy, I would assume it's probably the same player. But it looks like somebody, I'm going to assume, sold the 28 put in March and bought the 32.5 40 call spread. I think the net price was somewhere around 4 and change, 460 or 450. It's just, another way to play, just, to play a bullish move. If that is the direction they went, it wasn't quite clear to me which direction, but that's, like I said, how I assume it went. And then what was interesting though too is we saw the markets get a little bit tighter over the. They're still generally kind of wide, but we saw the option quotes get a little bit tighter. I think again, flow begets flow. I think that triggered some folks to tighten up their little quoting screens. So that was good. That was the trade of the this past week.
Yeah, that was an interesting one to watch. I was watching that guy. He put it on, and he just didn't get the spike, again, pun intended, that he needed out there. Again, usually when you see that set up, usually it's the put to finance the vertical, at least in a lot of traditional types setups, and certainly in the vol space, people like to get it to the upside. These days, you're right. The execution on the first one kind of made me wonder what the heck he was actually up to. I haven't had a chance to dig into this one. It sounds like you had the similar question out there. He did change his put strike, listeners. He's going for the 28 put instead of the 29 put. But everything else is pretty much the same. It was 1,000 of the March 28 puts versus 1,000 of the March 32.5 40 vertical out there. So the call strikes are still the same. Obviously, if he is indeed selling that put, it's a pretty meaty option to have in that back. So obviously, he could have it the other way. He could be gobbling up that put and then selling the vertical to help finance it a little bit, and obviously putting up the 40 kicker in case the worst comes to pass. There are a lot of ways you could interpret. How would you like to have that iron out? Given the preponderance of puts out there, you might think maybe this guy is looking the other way. Maybe he wants a little bit of a dark side on his favor. Either way, that's been lighting things up out there in Spikes land this week. In terms of VIX, it's, shall we say, a little bit active out there this week as well, and today is no exception. There were already, well before showtime, there were already 600,000 contracts on the tape in VIX land this week. So things were popping off very early in VIX. It seems like it's kind of settled down a little bit now. It's only 723. I said that only half jokingly, 723, but they only put on about 100,000 or so contracts in the last couple of hours. So they've really just lit it up out of the gate today. That's actually already north of the ADV, which is already an impressive 718,000. That's ticked up another 12,000 from last week. So VIX has been putting up some numbers of late. We'll get to today's and this week's action in a second. But first, let's break down the size positions out there. Getting to Mark's point earlier, he tweeted out an interesting graph, an interesting table of the top, I believe it was 15 options that traded yesterday in VIX land. And I think only, 3 of them were puts, Mark? And then coming into today, looking at the top overall size open positions in VIX options land, it's a very similar story. If you're looking for calls, there are not many to be found. There's only one call in the top 10 out there, and it's an interesting strike. Now let's get to the top 10. Number 10 cost you 146,000 contracts to break into the top 10 in the VIX options landscape today. I get you to the April. Feb's off the board. I got Feb on the brain today. April 18 puts. Number 9, 147 of the April 22 puts. Number 8, get ready for some puts, listeners. 151,000 of the March 23 puts. Number 7, $1.53 of the March 18 puts. Number 6, 165,000 of the March 22 puts. Number 5, $1.72 of the March 20 puts. Number 4, all the way up to 4 before we break 200,000. That's 202,000 of the March 17 puts. Number 3, our first and only call in the top 10 of VIXLAND. Say that out loud. That's something a few years ago I would almost think, I wouldn't say it was impossible, but extremely unlikely in a product that was usually 90% calls. Yet that's where we find ourselves again. 208,000 of the March 60 calls. Number 2, 213,000 of the March 21 puts. And number 1 with them, shall we say, a 22 caliber bullet out there this week. Not that big. 214,000 of the April 20 puts. Total of about 8.3 million contracts outstanding, about 4 million on the calls and about 4.3 million on the puts. There you go. That tells it all right there. Puts outnumbering calls now in the entire open interest. I mentioned the action that was going on out there from a VIX options perspective today. Total of 723,000 contracts on the tape. But some of the interesting stuff, Mark, I was looking at these before the show. The top 5 trades today, 4 of them are 50,000 lots. And it seems to be some funky, shall we say, upside afoot out there in VIXLAND. The number 1 most active contract today are the March pars, 100 strike calls, 50,070 of those traded. And that was well before showtime, like an hour before showtime, followed by the June. The pars aren't rich enough, aren't optimistic enough for you. We got a better strike for you. Followed by 50,030 of the June 150s, 150. Then we go back to 50,013 for number 3 of the March 150s. And that's not enough for you. We also have 50,009 for number 4 of the June 110 calls. And rounding out the top 5, we got the comparatively sane and normal March 30s going up 41,000 times. Had a chance to do a little bit of digging right before the show popped off. It seems like there's a March 150, June 110 diagonal going up. At the time, it had gone up at least 25,000 times, a 16,000 lot and a 7,500 lot going up on these levels. So crazy stuff. Mark, were you watching these insane diagonals going up today, and any other weird option prints catching your eye out here in VIX this week, sir?
Yeah, so is that ended up being a 4-way, right? The 100, 150 call spread versus the 110.
It looks like it, yeah.
Call spread. So I'm wondering whether they're, let me look at the open interest there. I'm wondering whether they were closing out of the March and rolling into the June, or if that was just straight up, hey, let's see what we got here. The open interest on the March pars is 71,000. So I'm thinking, and the open interest on the 150s is 79,000. So I'm thinking this was a close of the March and a roll into June, where they're now long the June 110, 150 versus, instead of the March 110, 100, 150. And my guess is this is some sort of crash hedge against a portfolio involving, this has to be some sort of portfolio related to a structured product or a bond portfolio, because that's the only type of person that would need that type of hedging, or some sort of crazy variance trade. I don't know. But my guess is that this is related to some kind of giant over-the-counter trade that's afoot somewhere floating in the nether that the three of us, well, maybe Tom, but the two of us don't get to see because we're not on that we don't get those looks like we should. Hey, if you're an over-the-counter trader and you do a really cool trade, you got to email me and Mark so that we can talk about it, and we'll give you a shout out on your secret name. Yes. If you want to be Raging Kitty or Roaring Bull, then we'll give you a little wink and you'll know it was you. So send in the trade that you have against that. We want to know. Inquiring minds want to know.
I like that notion of the code names, because you're right. These guys don't want publicity, but I haven't thought of offering them cool code names. So that might be a way to lure them out of the shadows, so to speak. But obviously, listeners, I was half joking before. This is not just someone, slinging to the upside, the par 150 or 110, 150. Obviously, they have something else against it. And this vertical, ludicrous as it may be, is a way to keep the most insane things from happening, and also to keep your risk on your books a little bit saner. Otherwise, some risk manager probably tapping you on the shoulder saying, I don't like how that looks on VIX, let's say north of 50. What are you going to do about that? And that's when they come up with, shall we say, these esoteric strategies. But I looked at that and I saw the roll and I was like, really? Are they rolling that? Are they keeping that alive and rolling that to June? But it does seem like that is indeed the case out there. Let's go around the horn here as well. Before we do that really quickly, I know Tom used to hang out in the land of all things OTC. What are your thoughts on this insane vertical? And perhaps more importantly, what do you think they're putting up against it in the OTC realm, sir?
Yeah, as far as against it in the OTC realm, I mean, I think you're probably thinking more like some of the structured products that would be launched or something, but I can't, this is so far out that what it's going to get somebody. I mean, there's not a lot to it as far as, hedging numbers that, it's just going to take too much to kick in to make anything worthwhile. There's much cheaper, hedges out there than that. I can't really think of anything that matches right off the bat. And, but yeah, it's really, really interesting.
Interesting indeed. Let's see if the rest of the week can keep pace. Yesterday was obviously a pretty active day as well. Listeners, 718,000. So pretty much exactly the amount of paper we have already on the tape. That was yesterday's total. And yesterday was obviously a big day. We saw crazy kind of intraday swings and the market was selling off. And then seemed like it was maybe going to start rallying again. And then you just kind of got legs cut off from under it again. So one of those kind of days. And yet you say only, but only 718,000. I think a day like that back, let's say a year ago before all this would have certainly merited well north of 1 million contracts, perhaps a lot more than that. But we have seen one or two of those days since last March and certainly since it all kicked off last February. Yesterday, 718,000 contracts on the tape, the most active contract, the March 45s. 36,000. And that was kind of it for the calls. Really, I think you got one more in the top five. 33,000 of the April 22 puts for number 2, 28,000 of the March 23 puts for number 3, 26,000 of the May, going out to May now, May 20 puts. And then out the top 5, we have 23,000 of the March 40 calls. So you could find a couple of calls. On a day when VIX was spiking up to nearly 30, you can only find 2 calls in the top 5. And as Mark was alluding to, in the top 15 trades yesterday in VIX, there was only, I think, 3 or 4 calls. So a day when VIX was doing nothing but really shooting north, people still couldn't be bothered to pick up some calls. Wednesday, 646,000 was the active day. The most active contract, this was a big one, 100,654. That's a big print of the April 21 puts. So someone liking themselves a little bit of the old Ape 21 line, followed by 41,000 of the March 40 calls, almost 38,000 of the April 20 puts, 36,000 of the April 23 puts, and round out the top 5 on Wednesday, 36,000 of the March 60. So a couple of calls sneaking in there as well. Tuesday, a less active day, 446,000 contracts on the tape. 37,000 was our top trade. They're our most active contract with the March 25 calls, followed by number 2, 25,000 of the March 40s. Number 3, 22,000 of the March 19 puts. Number 4, 20,000 of the May 24 puts. And round out the top 5 here, 19, almost 20,000 of the March 35 calls. So on a more quiet day, we could find a few calls in the top 5 there. A Monday, a pretty anemic day, 301,000 contracts on the tape out there. The most active contract, 27, almost 28,000 of the March 60s. Back to that March 60 strike. Number 2, 17,000 on the March 40s. So on the quiet days, that's when the calls lighted up. Number 3, you're only at number 3. You're already down to 10,000 contracts on Monday. That gets you to the March 30s. Number 4, 10,000 as well of the March 26 puts. And rounding out the top 5 here, 9,000 of the March 35 calls. So on a day when not much traded, it was all calls. But when things are actually trading, it still puts. Mr. Meatball, did you pay attention to these shall we say, interesting April par puts that went up on Wednesday, 100,000 of them for the 21 strike? Was that yet another attempt to get short? Were they gobbling those up? Did you see those go up?
Yeah, I did. That was those were part of a larger trade. The biggest block of that trade was a customer bought 30,000 of the 23 puts and sold 60,000 of the 21 puts in a 1x2 spread, paying 8 cents. Pretty interesting play when you consider how big of a premium April is trading over VIX, the VIX cash index. this is 100% a inexpensive play on the convergence trade. And, I got to say, I kind of like it. I actually mimicked it. I bought some, yesterday when we were down 80, I was buying the 23, selling the 21s, and buying the 16s just to cut the margin down because I'm a retail account. And, that was a really interesting and I think a pretty smart play on, the VIX hanging around 20 through April. And if you think that's going to happen, this is a really nice play. And that was the one that really caught my eye in terms of giant VIX trades that I was on board with.
I had a feeling that one came across your radar. I know you like that 21 strike. I also had a feeling, given the size of it, something else had to be up against it. So a 1x2 makes a little bit more sense. Let's see if we can make sense of VXX. This product has been moving of late, listeners. So everyone out there who grumbles about the premiums out there, and I'm with you most of the time. This one's been earning its juice of late out here. Coming at showtime's at a 1580. It's ticked up about a 1590 or so right now. It puts it up about almost 3/4 of a point from our last show, and well off the lows. It was threatening the 14 handle not too long ago out there. So this thing has been eroding like crazy until the last couple of sessions. It was giving up about a point a day at sometimes out there. It's been just getting annihilated and then getting a little bit back. If you watch yesterday during the madness of the sell-off, it was ticking up, but it wasn't really catching the lift, catching the bid that some folks thought of there. I know our friend out there, the Rock Lobster, your compatriot, Mr. Meatball, he was lamenting during the option block yesterday that he couldn't find the bids he wanted for his VXX calls out there. So VXX is a challenging product to have on the upside of these days. But it's getting a little bit of upside this week. So if you are owning calls, maybe unlike the Rock Lobster, maybe you were happy out there. Let's look at the top 10 positions. 358,000 contracts on the tape today. So an active day. The ADV, get this, listeners, 403,000 contracts. So that VXX is on fire of late. So that's up 61,000, the ADV, from this time last week. That's a freaking huge increase, I think is the technical term. So a lot of you out there are slinging ye old VXX. That gets back to what Jim Carroll was alluding to a few weeks ago about the massive inflows into some of these ETPs out there. Well, that's also going to translate into some options paper, and that's clearly what we're seeing. A total of about 2.3 million contracts are outstanding right now in VXX. Let's break down the top 10. If you're looking for calls out there, you're going to have a hard time finding them as well. Only 3 calls in the top 10 of VXX out there this week. Number 10 cost you 25, almost 26,000 to break into the top 10 in VXX land. That gets you to the April 15 puts. Number 9, 26, almost 27,000 is our first of 3 calls on our top 10, the March 16th. So an interesting strike. He kind of flirted with it, broke through it ever so briefly. I hope whoever had those on, maybe they took their opportunity to get the hell out of Dodge, but they were still open this morning, so maybe not. 28,500 of the March 12 puts there as well. Number 7, our second call on the top 10, 36, almost 37,000 of the March 30 calls. So a wee bit more optimistic of a strike there. Number 6, 42,000 of the March 13 puts. Number 5, 44,000 of the March 15 puts. Number 4, 46,000 of the April 14 puts. I think you know where I'm going with these, listeners. Number 3, 48,000 of the March 14 puts. Numero dos here, 50K of the March 16 puts. And yet again, number 1 still is the third of our 3 calls there. 90,000 still open of these March 20s up there. So interesting stuff. Of folks that they closed a little bit, only a couple of thousand this week. There's still 90,000 open of these things. So that March 20 strike has been an interesting one to watch. It remains the dominant strike out there. In terms of what was lighting it up today out there in VXX land, the most active contract, the Feb going out today, so the 26th, 16 half calls, 20,000 of those on the tape today. We were flirting with that not too long ago, so maybe some folks trying to get the heck out of Dodge before it went away. Number 2, 18, almost 19,000 of the Feb 17 calls trading today. Number 3, 18,400 of the March 33 calls lighting it up today. That's interesting. Number 4, 14, almost 15,000 of the Feb 16 puts. And number 5 out there, 13K of the March 15 puts. Mr. Meatball, I know VXX has been an active one for you of late, to the downside and maybe to the upside as well. What have you and your crazies been up to out there in VXX of late, sir?
Well, I think today and the price action of VXX is a classic example of why you don't use it as a static hedge, but it is great, as our friends Mike and Matt the Thompson twins would say, as a crisis alpha hedge. So as VXX starts to rally, as these ETPs start to get a bid, that's when the time to step in is, and to really trade them. Don't own them, and because frankly, if you look, we are significantly higher on the in VIX from where we were on Friday, and I think VXX is down, if I'm not mistaken, from last Friday's close. Maybe it's flat, but the high yesterday and today, I want to say, was like less than 17 and a half. You really didn't have a lot of a chance to to really activate your hedge, as Andrew and I were lamenting yesterday. I love these products. I truly do, but I love them when they're starting to rally and following through. We never actually saw the March contract break over April. And frankly, if you're going to hold VXX for more than a day or two, that front month contract needs to be trading at a premium to the second month, or you're going to just, spin your wheels. One thing I would point out today in terms of the price action is, we got some decent activity in February, but they're starting to take down implied volatility, these options. So if your plan is, hey, I'm going to short VXX by buying some out of the money puts, we could be down $1 this time next Friday, and you could be flat on your puts because the vol is really high in VXX, UVXY, and VIX. For static hedges, I much prefer using VIX or spikes as opposed to these ETPs. They don't do what you want if your goal is to own for for weeks the VXX. It will, you'll have these little battles you win, but the war, you will lose the war. You get much better performance owning the spikes 30 calls than you'll ever get owning the March 20 calls in VXX. It's that simple. You'll need, in order for the 20s to get in play at this point, what would we need to happen between now and March? I think we need the VIX to get to at least touch 40, stay in backwardation, and consistently, stay above 30 between now and March for those 20s to really pay off. They're kind of a lost cause, and unless we're at the front end, unless this is a swell and we're at the front end of a major vol event, which, if you look, we have a major vol event once every 2 to 3 years. We had a major vol event 1 year ago, almost to the day today. And prior to that, the previous one was 2 years prior. So, I don't know if we've got one coming, but it certainly doesn't feel like that's the case. So, I think those March 20s that we talked about are a really good example, a really good case study on why you use the index products and not the ETPs.
Well said, sir. Hopefully, if you listen to the show for a while, listeners, you know that you don't want to buy and hold these things for too long. These are trading vehicles at the end of the day. But I know we have a lot of newcomers in here, so it's always good to refresh folks on that. Speaking of refresh, I'll do a quick refresher on UVXY. We got a lot of questions coming in. We want to get to those as well. UVXY was at about 9.5 as of a few minutes ago, up about 0.75 of a point from last show. ADV up firmly as well. 413,000 is the ADV now in UVXY as well. That's up 52,000 from last week. So again, correlating with those inflows to the underlying, we're seeing the options lighting it up. And today, 453,000 contracts on the tape as of a few minutes ago. So UVXY has gone from this kind of sleepy, forgotten stepchild to, again, most of the other products have fallen by the wayside in this space. So almost by virtue of default, it's kind of one of the last standing. So people are piling into it along with VXX. And so it's getting some flows. The most active contract out there today, 32,000 of the Feb 10 calls going out today. So those seem a little bit distant, but hey, we got a little time. You never know what's going to happen, followed by the Feb 10 puts also going out today, 27,000 of those. Those are the most active contracts today. We'll do a quick top 5 in UVXY. Number 5, 23,000 of the March 12 calls. Number 4, 23,000 as well of the Feb going out today, 8.5 puts. Number 3, 25, almost 26,000 of the March 9 puts. Number 2, 34,000 of the March 10 calls. And the number 1 open position out there in UVXY right now, the June 5s, 37,000 of those bad boys open out there. If you're wondering, in the top 10, it's 70-30 calls versus puts. Only 3 puts to be found in the top 10 out there in UVXY land as well. We had a bunch of earnings popping off there as well. If you want more earnings, Vol, stay tuned. In about 45 minutes, I'll be back live with the Advisors Option Special, 100th episode spectacular. We got a ton of special guests, and I got my good buddy, Mr. Matt, the keeper of all this earnings vol data here. We're going to do a deep dive into all that fun stuff, how it's performing, what's going on from an earnings vol front. So stay tuned for that. And a little bit later, if you're listening to the podcast, of course, just hit next. It'll be there waiting for you after this one. But now let's get on into some of your questions. It is time for the Volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, let's kick things off as you like to do these days. These are crazy troubled times for everyone. Let's start it off a little bit of love. This comes from Jonathan Farr. He's a CFA, and he says, a big fan of vol views, and he's a habitual VXX/UVXY trader. I like that. Habitual. He can't stop himself. It's a habit. Well, thank you for that, Jonathan, and everyone else takes the time to send in those nice comments. Also, rate and review us on your platform of choice. It really does help folks continue to discover the program, and I'm glad to see so many folks out there are getting a lot of value and use and indeed enjoyment. We try to be fun here out of a program like Vol Views. Speaking of all this back and forth in VIXland, we asked everybody last week, finished up right after the show last week. We said, hey, we just saw that dip below 20 not too long ago. Was this a sign of things to come, or is this merely the calm before the storm? Quite simply, a month from now. So we posted this on the 19th, so a week ago, obviously. And then, so obviously they were looking at a month from then, so 3 weeks from now. We said a month from now, will VIX be above or below 20? And our audience came in pretty resoundingly, about 2/3, 68.6% saying above 20, and only about a third, 31.4% saying below 20. Mr. Tom, what are your thoughts on that? Are you on board with that? Are you buying what our audience is putting down, sir? Or are you taking the contrary position that a month from now we will not be above 20?
Tough one. I think a month from now, I could see us coming back below 20 a bit, but I don't know. It's a reach. Yeah, my stronger opinion is, I think we're a little more on this kind of range bound with both equities and the vol space. I don't see the real catalyst for it to kind of implode. Yes, I'm gonna switch my thought and stay a little bit above it a month from now.
There you go, a little bit above it. Mr. Meatball, what are your thoughts on what our audience is putting down, sir? Above 20 a month from now or below?
I'm going to guess the audience is above 20. I think we'll definitely touch below 20. I don't know if we'll still be there a month from now, just because 20 seems to be a nice floor. But, I'm going to go audience above, and just for giggles, I'm going to say below. It'll be a Friday, so maybe it'll be that Friday that we close below 20.
There you go. So flirting with it, but staying above 20 at the end of the day. Yeah, it looks like most of our audience agreed with the above 20. Rio Market Catnician, I just like that. I like that handle. Chimed in saying it's interesting. I voted below. We pierced it once. VIX will get comfortable below 20 within a month, in my very valuable opinion. Well, there you go. Rio Market Catnician. I just like saying your handle. All right, we got people chiming in. I love you live, folks, so we'll bump to you. I love seeing discussions and debates and conversations going back and forth in the chat. Sometimes listeners can answer their own questions while they're waiting for us to get to them. Regular listener here, my boy Luigi, says, yo, Well, yo to you, Luigi. He says, I have a question for the meatball. Starting to dip my feet into vol trades. Could you help explain in layman's terms what contango, backwardation, and divergence is? Also, if Longo has done a show on these, I have the app, so you could point me to them, and that would be easier. He also mentioned about if an ice cream cone can move GameStop, what can I look for in VIX? I'm not sure what he's referring to there. Maybe you guys know. But yeah, these terms, contango, backwardation, these are not exclusive to the realm of volatility. These are from the futures market themselves. That's kind of where we get these. And then now, of course, we apply them to VIX because VIX is a futures option at the end of the day. But they are by no means exclusive. If you're going to be out there trading crude oil, if you're going to be trading corn, whatever the hell you're trading on the futures and futures options front, you need to understand these terms. Mr. Meatball, since you have been addressed directly in the question, what do you have to say here for Mr. Luigi? Wants to know about contango, backwardation, and indeed divergence.
Yeah. Well, all right. So let's start with the curve in general, right? You have the VIX cash, which doesn't actually trade. It's an index that's quoted. Then you have these individual futures. Now, at expiration, the individual futures and the VIX cash, in theory, and the spikes cash, in theory, should be the same or pretty darn close. They do an opening print that is, say what you will about it, but, attempts to be close to the same. So contango is representative of a market that is more afraid of, the long-term unknowns than what's in front of it. So basically you have the VIX cash, and then the front month future is trading at a premium. The next month future out is trading at a premium to the first month future. And then the third month is trading at a premium to the second month, and so on and so on. And that, again, is the idea that, the further out we go, there's more unknowns, and that's what we're afraid of, not what's about to happen in the next week or two. All right. Backwardation is the opposite of that. We have the VIX cash or the spikes cash trading at a premium to the front month future, which is trading at a premium to the second month future, which is trading at a premium to the third month future, and so on. And what that is the sign that the market is under serious stress, and that it is more afraid of what is in front of its face than the long-term prospects of the market. It's basically a sign that there is racing for cover as opposed to setting up cover weeks out or months out. Now, divergence and convergence. Divergence is how far these different futures are from the cash, and convergence is the process of them walking toward where the index is. So, spikes is around 26. The March future is 27. There's a 1 point divergence, and over the next month, it has to between now and March expiration, it has a point with which it has to converge, and that is really what all of that kind of means. So right now we are in if you pull up you can go on to VIX Central, you can go on to look on LiveVol, you can look all over the place. You can go on to a trading platform and put on throw up the spikes, and you can look and see where those different spikes futures are. And what we have right now is the spikes trading below the March future, which is in fact trading at a discount to the April future. So we are in a contango within the front 2 months, which is really the main way to measure contango. But then you go beyond that, and the curve, that is, when we say curve, that is the entirety of the cash and the futures as a single image. The curve beyond the front 2 months is pretty darn flat. I like to joke that it's planking. Now, eventually that everyone gets tired from planking. Maybe not Tom, because he has abs of steel, but everyone gets tired of planking, and the market and that curve flops into a contango. Now, key things about contango and backwardation. Historically, we are in a contango about 80% of the time, 85% of the time, and then we're in backwardation about 15 to 20% of the time. And when we are in backwardation, historically, market returns have been negative. And when we're in a contango, market returns have been positive. There is a strong correlation between VIX curve structure and the performance of, and Spike's term structure and the performance of the SPY/SPX.
Look at that, Mr. Luigi. Where else can you get an epic answer like that in a few minutes off a simple question? See, I defy you. I defy you to say where else you're going to get fun content, quality content like that. We'll be charitable. We're running up against it. We've got so many people chatting up in the chat. We'll make sure we get to a few more. Like Mr. Unlimited, he says, I know you guys always buy VIX. Well, we don't always buy VIX, but we talk about it a lot. But on the platforms I use, I can't buy VIX. I can only buy things like UVXY and VXX. What platform allows us to trade VIX if that is possible, and not just UVXY and VXX? Also, can Mark tweet out a list of all the vols we should be watching and paying attention to, like their tickers, VolQ, VVIX, Spike, and whatnot? I can only buy things like UVXY and VXX. Well, you hit the tickers, you hit a lot of them there already. VIX, obviously an important one. You got VolQ there. You got Spike, obviously another one we talk about a lot here on the show. Of course, VVIX is the vol of vol. That's another one we watch. And then you mentioned VXX and UVXY. You watch those, you got a nice smattering of what's going on out there in the vol space. In terms of platforms, some platforms may not allow you to do futures and futures options, hence maybe not being able to trade VIX. But Spikes, I don't know what wouldn't allow Spikes. Spikes is just an option on a volatility product that's off of SPY. I mean, SPY is available everywhere. So maybe, Tom, you're out there getting Spikes disseminated all over the place. What are your thoughts on the platforms here for Mr. Unlimited? If you have anything else to add as well, have at it, sir.
Yeah. Well, the first thing I was just to be clear, like you can't actually trade VIX or Spikes, the index level. You can trade products on those indexes. So as Mark said before, at expiration, they all kind of converge, but just keep that in mind. But for Spike specifically, those the quotes are disseminated by Opera. So most likely, any of the retail platforms that you're looking at options on, you should be able to see Spike's options. The futures, on the other hand, are offered by MJX. They trade through a CME Globex platform. So it's really a matter of like asking who your platform and where your money is at, if you can access these different products. But just to be clear, there's no trading of the index levels. They're much more just an indicator, a level to watch. But the products on those index levels are what you want to be active in. And same for the VIX. If you should be able to see those. Those are, it depends on your data feed, but most platforms have access to VIX options. And if you're trading futures, most do have access to the futures. I would recommend before jumping into futures to check the margin requirements, because some of the smaller firms will charge a really high margin versus and depending on your trading status, if you're professional or retail. So that's something to just keep in mind as well.
Yeah, that's a little strange. Interactive Brokers is the opposite, right? They won't let you trade. There's a whole group of people in like IRAs and stuff like that aren't allowed to trade VXX and UVXY, but can trade VIX. My guess is you're on a platform that is free to trade. So the problem with VIX, and I don't know, and I think I don't know off the top of my head the fee structure for Spikes. I know it's way better than VIX, but they don't want to pay the exchange to trade these products. What they want to do is sell your order flow to Citadel. And so what you may be in is one of those free trading platforms that doesn't want to give you the ability to trade a product that you have to pay to execute. And let me start by saying, there's no such thing as a free lunch. That was actually a trading floor. That was actually a trading firm on the floor back in the day, who interestingly blew up selling premium. But if you're getting free execution, the cost of that is they're not going to let you trade in things that are that they have to pay to execute. So that's going to wipe out SPX, OEX, XSP, VIX, maybe Spikes, and that's not to your benefit. And there are some, and it may actually be costing you more than you realize, because there's some cool tax benefits with these different products and things like that. And frankly, you just heard me discussing how VIX is a better hedge and spikes are better hedges than trying to use VXX. And they've taken that away from you. So, my feeling is I always prefer to pay a commission, because then I know who this broker is working for. If you're getting it for free, you're the product, you're not the customer. Remember that.
Indeed. Look no farther than the massive. Everyone's talking about the Robinhood shutting down trading for GameStop. Look, just a month or two before that, they paid $65 million, a historic fine to the SEC for effectively ripping off their customers, getting terrible execution. That's an enormous fine, listeners, and everyone kind of just sweeps that under the rug. That, to me, was way more alarming than anything they did on GameStop, the fact that they were taking you to the cleaners, trade after trade, and no one seemed to care. They just got rid of that away as a little risk they swept away so they can go public. But interesting stuff. Of course, that music means we're already well past our time here. But we're gonna go into the crystal ball, combo crystal ball, and kind of what's cooking with you segment here as well. Spoiler alert, there were no winners in the crystal ball this week. Last week, we had Mr. Rhodes on the north side at 2075, obviously nowhere near high enough. I was at 2015. Mr. Meatball was at 1919. Spoiler alert, VIX is at about 26 3/4, and Spikes is at about 27 3/4 almost at the end of the showtime here. So none of us are within our margin of victory. So we'll go back around the horn. Tom, I will give you pride of place. You weren't on the show last week, so you didn't get a chance to be a loser like the rest of us. So A, what are you feeling for Vol this time next week? And then B, if folks are intrigued about all things Spikes, maybe they have questions like this. Where should they go? What should they do to find out more?
Well, where they should go and find out more is on MIAXoptions.com/spikes, and you'll see a fancy video there and a lot of information. I highly recommend looking at the resource guide. It's got everything you could possibly want to know about spikes. As far as levels for the next week, I feel like we just came off this decent spike. We have retraced a little bit. I'm going to push it down to a 25.5 is my guesstimate. And one quick comment. No more abs of steel, Mark. I have abs of ice cream as I've been healing my shoulder, getting it back in shape.
Abs of ice cream. I like that. So 25.5 for Tom. I got to say, at that level, I was kind of flirting around something in my head as well there. I will go next because I was the next closest loser out there. So I'm going to go. I'll give him some room. How about that? I will say 24 double, 24.55 this time next week. Mr. Meatball, what do you got next week, and where should folks go if they want to learn more?
I'm going to guess 22.22. And if you, we put out daily VIX content throughout the week and a couple other blogs as things move along. Go to optionpit.com, give us your email, and we will send you actionable content every day.
There you go. Actual content every day. You know where to go if you want to learn more about all things Matrix Execution. It's just matrixexecution.com. Check it out for yourselves over there and kick the tires and light the fires. Matrix Executions with an S.com. And on behalf of everybody over there in Matrix Land, and of course everybody in the Meatball and Option Pit Land, and Tom and everybody in Spikes Land, and indeed myself, I thank all of you out there for downloading, streaming, subscribing. If you're listening live, stay tuned. We'll be back in about 25 minutes. We have to retool some stuff here in the studio, but we'll be back pretty soon live with the advisor's option. So get a beverage, get a drink. We'll be back in a little bit. See you back here on Monday for the option block. And then we kick it off again all the way through on next Friday, another episode of Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest, most efficient trading platforms in the world. MIAX is proud to bring you Spikes Volatility products. Spikes options and futures are traded on the Spikes Volatility Index, SPIKE, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction, all for ultra-low exchange fees. It's Volatility reimagined. Learn more about Spikes at MIAXoptions.com/spikes. Options and futures involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution and trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions LLC, please visit matrixexecutions.com. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.